So LiquidX is a global network for working capital assets connecting corporates and financial institutions. What does that mean? Well, think of us like the Amazon or eBay for working capital solutions. You can leverage our technology and our legal framework to transact across all these asset classes, across any currency and across any jurisdiction, just by signing on to the LiquidX network. The other thing it allows you to do is transact directly with your bank group and actually control the investors who take part in your transactions. So here are some numbers on LiquidX. In 2016, we did about $3.7 billion of traded volume. In 2017, we expect to do about $6 billion. And just based on what's in our pipeline alone, we think volume is going to grow to about $12 billion or $1 billion per month next year. Our market participants are made up of large corporates, so typically revenue of $1 billion or higher, ranging pretty much every sector and pretty much all geographies. The financial institutions on the platform range anywhere from your kind of large international money center banks to your small US community banks. And then we're seeing a lot more activity from asset managers, trade finance funds, hedge funds, endowment funds. So by standardizing the market, we're seeing a lot more investors come to this asset class. And all in all, we've seen about 100 different credits come across the platform. Again, that's a function of the types of investors who can look at new and interesting, tricky credits. So more and more, we're seeing treasurers kind of look to off-balance sheet working capital solutions as a powerful liquidity tool. So there's a few reasons why. One, it's a really effective way to manage your balance sheet metrics. So if we take leverage, so when you sell an asset, you're bringing cash onto the balance sheet without putting on any debt. So of course, it's really effective in helping your leverage ratios. Also, specifically in AR, when you sell AR, you're, of course, reducing your DSOs and speeding up your cash conversion cycle. And then lastly, if you get a supply chain finance program set up, you can extend your terms and thus pushing out your DPOs. And more, actually, on the LiquidX network, we're seeing corporates inch towards this kind of working capital nirvana, where they're selling AR, they've got a supply chain finance program set up to push out their payables, and then they're taking their excess capital and actually investing it in dynamic discounting. Some of the other reasons, risk mitigation. So we're seeing a lot more assets come across the platform, specifically in Latin America. Also, as I mentioned, some trickier credits, so single B or triple C plus credits. Because when you're, the true sale of an asset, you're fully removing the credit risk from your balance sheet. There's certainly interest cost savings. You'll especially see this when a high yield seller is selling investment grade credits. Also improving commercial terms. So we had a really interesting conversation with a treasurer about a month ago. And he said, I'm paying these kind of old school, crazy discount terms like 1% 10 net 30 or something like that. And he said, when I think about that and I annualize it, I'm paying upwards of like 30% to get my money early. And we said, yeah, well, why don't you just sell your receivable at L plus 1 to 3%, annualized, so you've obviously increased your margins, plus you have no gap in your cash flow. In fact, you probably have sped it up. And he said, yeah, that's a really good idea, and now he's going to do that. Also, it's a way to strengthen your supply chain. So if you can tap supply chain finance and dynamic discounting at the same time, you can ensure that your supplier always has access to capital at a reasonable cost. And that's not just good from a corporate and social responsibility perspective, but also you're taking cost out of the system. And trust me, that cost is getting passed on. So with that, I'll go into the demo. Few things to keep in mind. It's very flexible, very easy to use. It starts by the corporate coming in and uploading their invoices. So here we have a bunch of invoices for almost $40 million. This can be done through API or a bulk invoice upload. Very, very easy to do. Next thing you'll do is set up your transaction. So you're going to set timing of when you want to get funded, plus you're going to set the pricing. And there's essentially two price points. You set a max discount margin, there we've set it at 65, and you set a buyout discount margin, there we've set at 50. So the max is sort of like a reserve price, and the buyout discount margin is like eBay's buy it now. So if that price gets hit, the transaction comes down right away. And then the last step is on the left, you're going to set up your bank group. So again, you can deal directly with your bank group, or you can invite other investors to your transaction. So the control is completely in the corporate's hands. So we'll choose our bank group, and then we launch. And all in all, that takes about 3 minutes for a corporate to get a transaction launched, so it's not a lot of work. So what I've done next, now I'm signed in as an investor. And when the investor comes into the platform, they're going to see a live market of all the assets they could potentially purchase. So it's essentially a window to the marketplace. And let's take the first one, for example, JB Distribution Inc. So if I click into there, I'm going to get taken into the transaction ticket, and then I can click down to see the different information, invoice information, timing, governing law, all that sort of stuff, the details on it. But getting back to the transaction, here I'll come in and place my bid. And so here I'm going to bid 75% of notional amount for the basket and at LIBOR plus 65 bips. So that was the max discount margin. So now once I do that, my bid will show up in there. And keep in mind that this bottom part, the allocation box, is completely transparent to both sellers and other investors looking at the transaction. So now let's say another bid comes in. Two more bids came in, and you can see that some of the competition is starting to take place. So one other bid came in for 25%, and that got knocked down by the next bid that came in at 63 bips for 75%. And it's taken allocation away from the two investors that came in before it. And the other thing to keep in mind is that when a seller sets up a transaction, they set the timing each time they post, the pricing each time they post, which means they're getting this feedback and they can make informed decisions the next time they go to post up a transaction. So the last thing that happens is someone comes in and buys it out. They say to themselves, you know what, I like these assets. I want them at 50 bips. That's fine. I'll take it there. And now as a treasurer, your cost of capital just came down by 15 basis points. The other thing to keep in mind is all this data is being retained in the system, of course, and there's all types of customized reporting we can create and exports directly into Excel or PDF, however you want it. So we like to show this slide because we think it's two really good case studies of what I just showed you. Essentially, on the left, you have an IG seller. On the right, you have a high yield seller. And the blue lines represent volume. And typically, corporates come in, they dip their toe, they start to get going. And as the volume increases and the liquidity comes into a certain program, that green line, the pricing, starts to compress and come down. And we've seen that happen over and over again. So why are treasurers choosing LiquidX? Well, first of all, it's a free option. So there's no sign-up fees, no setup fees, no servicing fees, nothing like that. The only time you'll pay a fee to LiquidX is for a successful transaction. So in that sense, it's a free option. Also, it's a single interface to deal with your entire relationship bank group. And so again, if you think about the old world where you're signing bilaterals with 40 different banks to do different asset classes in different currencies and jurisdictions, that takes a lot of work, a lot of, quite frankly, brain damage to get in place. So we're saying, well, why don't you just sign up to one network and deal with your relationship banks, plus you get access to new investors. The other nice thing about it is that you can manage this across multiple entities. So you can do it from a centralized or decentralized perspective. And there's always global reporting, and you can set up different users to use in different ways. Next, transparent pricing. So like I showed you, this is a very opaque asset class, and we're just trying to bring transparency to it. And we think there's a lot of benefit in that for the corporates. Lastly, we're a technology partner. So the way we build out our asset classes is we work alongside our clients, and they tell us what they want to build, what they want to standardize and customize, and we go out and build them. We don't charge anything. We just ask that you use it once we build it. And we've been quite successful with that model. So you're probably thinking, that's great, but why are banks coming on? And well, the answer is, one, it's a free option for them too. Two, except for maybe 3 or 4 of them, most banks have a hard time originating this in a primary market, and this is giving them that access. And a lot of times we actually find ourselves making introductions and building relationships between banks and new clients. Also, when you deal in the secondary market, you face a certain amount of skim and a control issue because the bank is going to control who sees what assets. Now we're giving the power to the corporate. Also, we do white label technology. So a lot of banks come to us and say, hey, we really want to do the product, but we don't have the infrastructure to do it. Can we leverage yours? And the answer is absolutely. So we've gone to a few clients with banks to pitch, and that's been quite successful as well. And then just to leave off, what's next in 2017? So buzzword on everybody's mind, blockchain. Put simply and quickly, we see the tokenization of invoices as a way to really supercharge this asset class. So we're really excited about that. We should do our first blockchain trade this year. We're also bringing trade credit insurance to the market, so it'll be the first point-and-click electronic trade credit insurance. We're working with the largest broker to do that. And lastly, letters of credit is something we're building directly with a client as we speak. Thank you.